like that. And my competitors are there, so why am I not there? So the newsletter has been again very interesting. A lot of research notes again, and institutional investors roundtables. So a whole lot of those is also something that one has been focusing on. And then being there at global events, this is where all of these people would come in. So if you get, good speaking opportunities in Berlin or in Hong Kong or in one of those places where all of these guys are going to come in, your story will in one shot go to maybe at least a couple of hundred relevant guys there. So I just wanted to give you a little bit of a picture. And okay, let me see if I have this slide out also. And again, something which the team did was, when we talked to some of these institutional investors, they said, we know projects can take a lot of time in your country. We don't want to go the greenfield way. We said, we want to construct this new road. It's 300 kilometers. It's 10 billion. They said, okay, we don't want to touch it. Because we know if you're saying it'll take you 4 years to do this road, you might end up taking 7 years to do. So then they said that's a loss for us. So then what the team really focused on was a category called as asset recycling, right? And this is something which, when they're looking at alternatives, institutional investors love brownfield. They love good companies. They try and put their money into corporates which are doing well, or they can put their money into brownfield assets. So this is an example. So what we did was we picked up 9 roads where we were generating money by tolling. So if every time a car passes by, he'll give you an X amount of money. And we picked up 9 such roads which were generating very good revenues. And we put it all together. And it was actually not all 9 which were generating good revenues. There were some good ones and there were not so good ones. But together as a bundle, because we know that financial investors don't like small ticket sizes, so we had to bring them all together. And then we thought that if I keep on collecting toll on this road year on year for the next 20 years, I'm going to make an X amount of money. As the government, I did a math, and then I put more buffers, and I'll say, okay, no, it will not be this much, it will be so much or whatever. And finally, I come down to a formula to say I'll be able to generate an X amount of money. And that's what we put in the first set of toll roads, put a reserve price of $450 million, right? And then we told it to a lot of the institutional investors globally. And finally, we did get, Macquarie, which had come in, and they picked up the asset for $1.45 billion. So it's like a win-win situation. We got that money. We would have collected the money over the next 20 years, but today we got that money day one with us. We were able to then move this money to our greenfield assets, which in any case the institutional investors were not very happy giving to us. So that's the sort of a thing. And then this can be applied to so many different sort of areas. For example, every country may have a metro or, a metro rail, or, even if you have your trains things, and you may need to put in more coaches at some points of time. Once your population increases, you'll say, okay, let me put in 3 more bogies or whatever. These things cost a lot of money, right? And as the government, should I be buying these things? Then we say, why should I buy? Why don't I? And then, we picked up this thing and we took the model to financial investors. And we say, you guys go out and buy those trains and then you lend it to me, so that I don't have to shell out so much money upfront. And as I generate some revenue on my metro, I can keep on continuously paying you. It's like a win-win situation, because they get a certainty. If they're putting in $2 billion to me at, let's say, 6% or something, they're happy and we are happy. So that's the way it goes. So I just wanted to, share some of these, a little bit of our learnings on institutional investments, but very clearly, just this one last point, blended finance again is a beautiful thing to be focusing on. What does it mean? As a, we'll be talking a lot on healthcare. And sorry, I'll just take this last 1 minute. But what is very interesting is that, we have many a times people who are ready to give us grant money, right? They'll say, okay, you have a USAID. In this case, the case study that we're going to look at is USAID. They'll say, okay, this is 10 million and, it's a bad COVID situation. We understand you guys are struggling. Here's a check from us for 10 million, right? Now, what could we do? If I take this 10 million, right, And if I start using this money and I give it away, you know, I could have bought a lot of vaccinations and I could have done that, and that's the end of it. You know, that's the end of 10 million. How can I make my 10 into 100, right? So what I do is, I go and tell the financial guys, right, that I've got 10 million in my pocket, on the basis of which I'm going to be giving healthcare solutions, right? Would you like to invest in? Now, as soon as they say that, hey, there is, you know, this money, and this money is just lying there. This is the money which will come of use. If, you know, so for example, these guys, these are serious investors. They want their returns. In case they don't get their returns, right, I have already a pool of 10 million from which I will be able to give them their returns. So then they don't mind. So, you know, when we are talking about blended capital, we are talking about, on one side, you know, the philanthropic capital, donor capital coming in, and on the other side, serious institutional capital, banks coming in and putting in money, right? So it is catalytic capital. So in this case, either I could have just bought vaccinations out of this 10 million and finished it off, but I used it as catalytic capital. I said, I have this 10 rupees with me, or 10 million, and I have told, you know, DFC, I have told these banks that you give me money. So for 10, they give me 100. They actually gave me 90. So instead of 10 million, which I've just given for vaccinations, I ended up having 100 million in my kitty now, 10 times of that. This is a real case study. There's a lot written on it, right? Now with this 100 million, I went out and I searched for solutions to fight with COVID. And a lot of those solutions were really, and you can just see numbers out there, 60 solutions supported. 16 million was what was committed by these guys, but 160 million is the leverage. You know, so I just made it a factor of 10 automatically, multiplying your money. That's what is done. 25,000 people trained out of it, more than 1,000 healthcare facilities reached, and 25 million people reached. There's so many solutions which have come out of it, and the kitty remains intact. You know, that's the fun of it. You've ended up using catalytic capital, multiplying it by 10 times, ending up getting so many healthcare solutions, and still having the 10 million with you. So blended is a beautiful product. I can see this happening all over the world. A lot of it in Africa. Initially, you know, people will be very happy going the blended way, because there's already some donor money coming in. So either you just take that donor money and spend it there and then, and you don't get anything out of it, or the other way, you use that donor money, you get institutional, you know, you get your banks and other guys to think, look at that kitty and say that, hey, this is not as risky as it was, because if these guys go bust, I will still get my money back on it also. Right? So again, this is a great product which would be very useful for you guys to look at. So I just wanted to, you know, give a little background to institutional investments. Thank you so much. Back to you, Courtney.
Yeah, please. Yeah, go ahead.
You're speaking about offering investments in brownfield projects, and then you said at some point you added some greenfield. How did you do that?
What I meant was, we wanted money for greenfield assets. But the investors are saying, why should I give you? You guys are so risky. You say a project will take 3 years, you end up taking a lot more, right? So they say, we don't want to do it. But I say, okay, don't worry. I know a new road doesn't sound good to you. Why don't you look at this road? You can stand by the side of the road and look at the number of people moving in, the amount of money which is getting calculated. Stand there, look at the amount of money. So they love that. Now, once I have received, you know, all of this money as brownfield, you know, they liked it and they take it. When they take it, they give me the money. Then I use that money for greenfield. That's how. No, the money is there with me. As the government, on day one, if you end up getting the money which you're going to collect for the next 20 years.
It's not that they look at what's point by point for what you have used their money. No?
No, they would not. No. For them, it doesn't matter. You know, it's like, this is like a government saying this road is with you for the next 20 years to run. Now, you have to manage it, you have to take care of it, right? So from there end, the investors, and fact is, in this particular case, the investor is really happy. It's already been 3 years. and they're generating much more money, you know. So we thought 950 million was our case. They gave us 1.45 billion, but they're very happy. So if they're happy, means that they're going to make much more money over the 1.45 billion, which is there. But you know, over a period of time, when institutional investors spend time in a country, they get more and more confidence. That's when then they will slowly start also moving towards greenfield assets. Okay, thank you.
Thanks. Any other questions?
I'm sorry, I came late, but I got the tail end of your submission. So what you're suggesting is that if you have, let's say, 10 million, 20 million from any of the development partners, you could place that with some of the institutional investors as equity?
No. What we're saying here is that...
Just a summary so I don't waste their time.
So just a summary, just for a quick... So I'm so sorry. So the thought process here is that there are people who will not put in money. Financial investors are not going to put in money because they have a little fear. It could be a country risk, it could be a political risk, it could be any of those risks where they have that fear. But if I'm able to show them that, hey, I already have, for the broad purpose that we are talking, I already have some money here lying with me, right? And if you're making, you know, if you're investing, let's say, maybe $10, right? With the expectation of making $1 above it. But you might losing $1. So instead of making 11, you might lose 1 and make 9. So what I'm saying is this kitty has already got some money. So the $1 that you lose, I'll try and cover you from what I already have with me. This gives those guys confidence. And then they're able to put in that sort of, it's a very standard, I'm not a financial expert, but people, you know, blended is a very standard thing which happens in the developed parts of the world a lot. But the developing, this is sort of one great solution for it, you know, and one should really, look at blended in your respective countries, because, you know, the other pieces, one side of it is coming to you in any case. So just use it as catalytic capital instead of just using it, you know, like money comes and, because it goes and then it doesn't remain. Here that, you know, USAID money, which they had given us 30 million, it's sort of still intact. But the, you know, the catalytic power of it has been really there. I'm so sorry if I took too much.
It's all good stuff. Thank you for the questions. And since you missed the first of the presentation, if you leave your card, make sure that you do. We'll send it to you. Where are you from? Ghana. Welcome. Thank you. So I'm Courtney Fingar, for those who've just joined us, a senior advisor for WAIPA and also an FDI consultant. Dushant's given you a really fantastic, I would say more than an overview, but an explanation of institutional investment, what it is, how you can harness it. I'll be a bit brief because I also want to give space to the really excellent presentation coming up next. So my expertise is in communication. I was a business editor and journalist for 20-something years. So what interests me is the language around how to engage institutional investors, how to talk to them, but most importantly, how to give them the information that they need in order to make these kinds of decisions, which is a slightly different art than speaking with greenfield investors. So let's talk a little around this. I already introduced myself to you. So the way I see it is there is a little bit of a language barrier because of IPAs having a traditional remit to engage greenfield investors, and you tend to talk a lot about your location attributes, sometimes in generalities, which is okay because you're explaining your overall investment potential. But you'll have to go a bit deeper than that to deal with institutional investors and move more towards a focus on projects, returns, rather than your overall selling points of your location. So, you know, Dushant presented some information around the SDGs, and obviously institutional investment. Now, greenfield investment has a role to play in achievement of the SDGs, but institutional investors have potentially even bigger role to play. And what we hear very often is that investors are very keen on SDG-friendly projects, but they'll often say that there's a lack of investable projects. But is there actually a lack of projects, or they just don't know how to find them? It's probably more the latter than the former. And so that means we need to do a bit better at cataloging your projects and making sure that investors are aware of them and then presenting them to investors in a cogent way. So again, there are opportunities out there. They're really fantastic projects. We just have a bit of a gap here between knowledge sharing on both sides, and a bit of a mismatch here between what investors are looking for and how it's being offered to them. So I won't go too much into the definitions. Dushyant's done a much better job at outlining all of this, but I really just want to highlight that it is a different game. And you know, your Greenfield FDI is around companies. You know, you're talking to companies about their physical locations. It's direct, so they're going to have an actual physical footprint in your location. And often they're market seeking, so you can talk about your market. This is where you do want to talk about your location, because it's ultimately a very site and location specific investment. So that's where you want to talk about your workforce, your costs, your geographic location, your market, your access to other markets, all those things that IPAs really know how to do. But if we're looking institutional investment, it's a financial play, so you need to really think about the models, the structures, most importantly, the return, the risk involved, how the risk can be mitigated. It's very focused on asset classes. And of course, it's all about the return that they get, and it's project-centric. Now, the location does matter, because obviously, you know, we saw India as a really great example here. So India is a big, exciting, attractive market. So that would really naturally interest institutional investors, but ultimately it's going to come down to the projects. Whereas if you think about with greenfield investment, they are creating the projects themselves. So it's all about making a project from nothing. Whereas this is about investing in existing projects. So that's why you have to retrain a little bit how you talk about these opportunities, and where there's often a gap is what I call the packaging. So thinking about what the most relevant and interesting projects and investment opportunities you have that you could present to institutional investors, packaging it and putting it in a way that speaks to them and making sure they have the exact information they need. Because what I tend to find anecdotally is very often agencies will just say, well, we have opportunities in healthcare and infrastructure. But if you ask what the opportunities are, there's sometimes a bit of a blank. So having that information and being able to have it quite quickly when these investors need it is really, really useful. And there's a general process, probably not surprising, but it's worth thinking about this chain here and how you can facilitate this entire chain. So thinking first is, again, what opportunities do you have that you think might be the most attractive? So of course, projects that suit your development needs, but also what do you think are the most attractive projects? We discussed a bit in a workshop on yesterday in an African IPA dialogue that it's sometimes better to pick out just a handful of really attractive projects rather than present 1,000, only some of which are really going to work. So once you've identified what are your projects that you have that could generate some interest, but that also meet the needs that you have, then this is where the packaging comes in. What are the specifics? Do you have all the information that you need that an investor would naturally ask for? What structures might make sense? And Dushyant gave examples of some of these different options. What are the financials? What are the returns? Thinking ahead to the questions that a financial investor would ask you and making sure that you have that information. You should really have a pack on each project of all of this information that showcases it. So then targeting, so you've got your projects, you think they're attractive, they meet your needs, you've got the information to hand. Then thinking which investors, this is where studying institutional investors and looking at those who invest in geographies like yours, in projects like yours, in asset classes and sectors like the ones you're presenting. So coming up with your hit list, but then really trying to understand, look at what they've invested in before, understand their patterns. Then of course, then you'll see what interests them, but also what they'll care about and what they're probably likely to ask you. Then of course, is the really hard part, which is engaging them. And this is not that different from your typical FDI lead generation, which is really always the hardest part of this chain anyway. And of course you have advisors. Some do it in-house, some engage external consultants and lead generation experts, and both of those work equally well. But of course, I think it's easier to do this last part of the chain if you've done all these other steps properly, because then again, what you don't want to do is skip these steps and engage these investors and just say, oh, we have opportunities, without really thinking through what those opportunities are and why that particular investor might care. And this is where you get your end goal, ideally, which is the actual investment. So I mentioned there was a language barrier. These are very basic, but sometimes I think basic is actually useful. Be specific. Again, the generalities of your location don't really work so well in this kind of scenario. Be specific about the projects, about the returns, about the financials, it's really useful to even talk about why this project is SDG friendly, because investors care a lot about that. So use that, why that would help them meet their own SDG targets and ESG criteria that they may have. As I mentioned, present to them really clearly defined project opportunities. That's where, once you've done your packaging, you will have that to present to them. No, you don't have to give them all the information at once, but be very clear about what you're offering to that specific investor. As mentioned, look at the financials, the structures. How, you can be open to different structures, but give some ideas on how you might want to work with them and what type of arrangement you think is going to work best. This is where doing your homework on them and what types of structures and models they tend to favor is going to be useful. That fits into the next part, which of course is doing your homework on them, where they invest, how they tend to invest, what they tend to care about. And no spamming. Again, generalities don't really help, and you may only get a few shots at the really important institutional investors. So what you don't want to do is go to them with any old project, that's not relevant to them, that may not appeal to them. So think carefully about what you present, so that even if that particular project turns out not to be of interest, you've put yourself on your radar as a location, as a partner that understands their investment patterns and what might interest them. So be very selective about what you present and to who. And again, as mentioned, investors care a lot about their ESG criteria. They care more and more about assisting with the SDGs. So really put that front and center and why it matters. Now, of course, the investors are ultimately going to care about their returns and their needs. So you don't want to only speak about what it would do for your location, but you can add this this corporate social responsibility aspect. And that's all I've got. Feel free to reach out with me to discuss this further. I'm happy to take any questions at this point, or we can also take questions at the end after Gareth does his presentation.
Meridium is one of those, institutional investors which has been really investing into SDG space. So this is another class of, institutional investors which are now focusing a lot on, purely. So, you have the impact investors, but also institutional investors which are doing a lot on the SDG space. And again, it's all about measurement and showing results. So both, when you are already defining what is their expectation from the government, when they're going to put in money, they will expect, and if this money gets utilized in making a hospital, a school or whatever, give them the credit. That's the only thing which matters to them. So communication is actually at the heart of institutional investments. It's a very good point that you picked up. Absolutely. Just wanted to give that.
Thank you, Dishant. So I'd like to give the floor now. Gareth Presch, for those of you just joining us, is the CEO of the World Health Innovation Summit, and is really at the front line, actively involved in bringing institutional investment to deploy to support healthcare goals around the world. So we'll tell you a little bit about that.
Yeah, thanks very much, Courtney and Dishant. I think we're going to be able to stitch all this together, and I suppose the question is, how do we bring this all together? Oh, sorry. I'll wait. Yeah, anyway, so I suppose what we're here to discuss really is about this paradigm shift in investment. I mean, this is what the conference is about. So how do we actually leverage this? And we've had a really good insight this morning already on how it's actually happening. Because Dushyant has talked about pooling resources, bringing those collective investors together. And one of the key sectors and one of the key drivers of this can be health, because it's apolitical. So in 2015, going back, I'll just give you a little bit of an insight into my career. I used to be a chief officer of the National Haemophilia Council in Ireland, and I advised the Minister on health programmes for many years. So I understand the background and how you work within the health sector. And it's a huge industry. It's about $12 trillion at this stage. And how do you actually tap into the blended finance that Dushyant has talked about? So, you know, think about the pension funds within the health sector. Okay, so for example, I work closely with NHS England, which is about 1.7 million staff. So just think alone, they're high earners with disposable income. So I've already started that discussion with them. So let me just start a short introduction, and hopefully this will go. So one of the things I wanted to start very clearly with is around mental health and well-being. And we have to redefine our model of healthcare and what it means to be healthy, shall we say. So I just wanted to show an example of this is what happens at childbirth if you neglect a child. And this leads to all sorts of complications as we get older. You can imagine what happens to the individual, you know, from extreme neglect. Usually they'll end up in jail or they'll commit some sort of heinous crime. That's normally what happens. So I just wanted to put that into people's context, and that's also an opportunity. I'm going to set the scene. I'm going to explain the real opportunity here in terms of opportunity cost, which is enormous, and also the value proposition. How do you build trust in a post-COVID world? How do you look at the intellectual capital and capture that? So the S&P 500 companies in the world, most of their revenue is based on intangible assets, okay? It's based on intellectual capital. In the health sector, we actually have the intellectual capital that is actually harvested by other companies and then resold into the health sector. So these are huge opportunities. And the lessons that we've learned from COVID, okay? Better health equals an improved economy. We need to stitch this all together. So let me just take an example of the UK, and what does this mean in the UK at the moment? So we have about 2.5 million people out sick at the moment, ill health. So for Africa, this is for lower middle income countries. Make sure you don't repeat this lesson. Do you know what I mean? When you're developing your economy, make sure you don't repeat this mistake. This is almost, look, you see the GDP, it's about 7%. And yesterday we were talking about, Douglas was mentioning that GDP impacts FDI, okay? So think about that, okay, as we move forward. And look at the huge opportunity that we have if we actually develop health systems that are based on prevention. This is where the goal is. This is the opportunity. So what am I talking about? So the current system that you see, this is what we have deployed all over the world. This is disease. This is basically a sick care model. We get sick, we treat you, okay? Now, the real problem with this is that we don't have any staff, okay? So, for example, Africa has no staff, UK has no staff. We can't meet the demand. But the real opportunity is here on the right-hand side, which is around prevention. And this can create new and meaningful jobs, give a return on investment, and it's a win-win by also strengthening the existing health service. We do need to keep the existing health service. Let's also remember how we have done, think of the vaccine, okay? We talk about AI. In 62 days, we had a vaccine. This is incredible opportunity. With AI coming, we can basically look at cures for the future. So I wanted to highlight a couple of things around why, and in pre-pandemic I spoke at a One Health conference and highlighted the huge issues that we were facing by 2030. This was pre-pandemic, okay? 18 million staff short, $8.7 trillion in terms of costs, okay? Enormous opportunities, growth in terms of population. And then what I wanted to also mention, you'll see there some of the numbers. I mean, it's astonishing what's going on in the health sector at the moment. And this is why it can be a huge catalyst for change. During COVID, and again, I want you to look at the opportunities here that's come. So we had elective surgeries. That's about 28 million people didn't have surgery during COVID. All those people still need surgery. That could be done as wellness centres, as we develop these as a wellness market. So I met with Zanzibar. I had a meeting recently about how could we develop wellness clinics in Zanzibar, for example. So this is another massive opportunity. And I also wanted to pay, you know, just so that you're aware, you know, we lost well over 100,000 doctors and nurses during COVID. I mean, this is unprecedented. You know, that's a brain drain. We have burnout and so on and so forth. I'll talk just a little touch on Alzheimer's again. These are all areas of opportunities because we're going to need people to look after these people. In China, for example, you'll have 500 million people over the age of 50 in the next 20, over the age of 60 in the next 20 years. Where are they going to go? That's a huge market opportunity. Climate health is one, okay? If you don't have clean air, you don't have health. It's the same with water. We need, you know, you're consuming water at the moment, which is basically plastic. And look at the numbers in health and economic costs. You know, $2.9 trillion in costs. And that's only what we're measuring, by the way. So these are some of the things that have happened at the moment, and we're hoping to make this connection with COP so that we can actually leverage this. It's really important to understand the impact on health and well-being through climate change. And this is probably one of the most startling things that you'll see now. And this is where we come back to ESG and investing. And this is particularly important for lower middle income countries and for emerging economies. You'll see here, this is basically our supply chain, what we're actually doing at the moment. And I'll give you a practical example. So contraception pills and that, where do they end up? They actually are flushed down the toilet, which then ends up in our rivers, which then ends up in our food chain. And for males, this actually affects our fertility. So we're actually killing ourselves. We're actually doing a good job of wiping ourselves out. So it's very important that this is factored into every ESG investment. Absolutely crucial. I just wanted to talk about the future. I brought this back up. But so how do we bring all this together? And how do you create a GP practice at scale? How do you manage people's health and well-being? Well, you create a platform. You create a platform where you can disseminate information, you can bring in capital into that local economy, and you can create ideas, okay? And this is what we did. We prototyped this in the UK. We done this in Nottingham. There's 5,000 people at that event, okay? This is a way that you can engage in public health messaging. At the same time, you can sell your products and services. It's a business model, okay? It's a win-win for everyone. And this is really important because this is where you link into the financial market. So I just showed you the people. So look at the people. They're on our platform. Do you see what I mean? And this is how you can scale it. And the beauty about this is you can do this in any city. Accra, it can be Mumbai, you can do this all over the world. And that's the beauty of it. And then you can create your financial model which makes it sustainable and investable. And these are the programs that you can spin off the back of it. So you're looking at children's health and well-being, you're looking at workplace health and well-being, you're looking at, shall we say, seniors, looking after elderly care. So it's a whole ecosystem that you create, and especially around green, energy, waste and water. And the return on investment, the opportunity cost is enormous. Remember I spoke about $12 trillion. Okay, you're talking about the gap is $3.5 trillion. Okay, so a pound in, 36 back, multiplied by 12, you do the maths, right? We can do it. If we want, this is what it's about. We need the leadership to do it. I wanted to talk about digital health because it's such a hot topic, and AI, and everyone's talking about it. So we are creating platforms to actually support. There's 3.5 billion people don't have access to healthcare. Think of that as an opportunity. This is an enormous opportunity. Everyone talks about healthcare just locally, but there's huge opportunities in this space. Sustainability in terms of a digital platform, this is some of the publications that we have, all available online. It's done open source. We've done it from the common good perspective. And this is the sort of sectors, the sort of unparalleled opportunities in terms of investment, in terms of medical equipment, sales, distribution, insurance, healthcare facilities. All of these areas we can access, and we can speak that pooling of resources, that blended capital. That's exactly what we can do, because we can bring those institutions together. This is just some of the emerging technologies that are coming out, gene therapy, all this, and this will be accelerated through AI. Now, what are we doing with the governments? So how do you bring the governments into this sector? So we created this Global Social Prescribing Alliance, and this is now working closely with governments all over the world. So we work with NHS England, you'll see we met with the Japanese Minister for Loneliness, and social prescribing is where in the UK they're actually encouraging people for social activities. Okay, so they're alleviating the pressure on the system and they're reducing costs. This is the global network, so you can see it's quite established. And at the same time, this gives us the opportunity to speak to the institute, to the pension funds, most importantly, because we can network into all these pension funds, which is massive, you know. We talked about the creative economy. I just wanted to talk about this because this is the arts, and one area to focus on as well. So NHS England, and this across the field, they have about 100,000 vacancies. So we're currently talking to them, how can you move that line item of the budget across to the creative sector and invest in the arts, for example. So you're creating more jobs. You know, this is the kind of long-term vision. We're starting these place-based impact investing labs in the UK with a number of colleagues, and one's an economist, and Mark's saying if we get health right, everything else falls in place. So this gives us an opportunity to meet with the local authorities and talk to their pension funds and their investors. Expo 2027 is one of the federal government's bid for US. I'm one of their advisors, and they are focused on health and well-being. Again, another opportunity to drive investment. CLOP, which I mentioned, I'll just touch on that briefly. We're looking to do something quite significant here. And then this is exactly the blended finance that you talked about. So we've created this Global Sustainable Impact Fund, GSIF, to support Vanuatu. And they have a whole list of projects, right? And they're bringing match funding. They have a 150 million grant from the World Bank. We can get 600 million off the back of that. It's $1 billion fund we're looking to create, and it'll be a South Pacific fund. And you mentioned being specific about your location, Ferrari Bay. It's a deep sea port. And you might say, what's that got to do with health? It has everything to do with health, because then off the back of that, we can finance the health projects because they get capital in through taxes, you see. This is Munich. Recently I was in Munich. I met with some of the BMW family office, Munich Collabs. We had a meeting about deploying into Munich and other European cities. And this was the African Health Summit recently, where I met with Tanzania and Zanzibar and other African nations. And some of the last slides just around leadership. Like, leadership is key here, you know. So one of the most important things that we need to encourage is leadership. And we need to be bold. We need to be ambitious. You know, if we're short $3.5 trillion, we need to say we're short $3.5 trillion. And we need to go extend that, because people need to be aware, and we need to tap into capital that we're not also aware of. So, for example, the likes of the faith communities, who hold lots of capital, who are interested in doing SDG projects. So we need to bridge that gap. This is just something I thought I'd share before, so that you're aware of what's coming, and so that we're not under any illusion of the collapse of biodiversity. And it's very interesting. I took a run this morning along the promenade, and the air quality is shocking here, absolutely shocking. And it's something that you need to be aware of as you develop your economy, because this will cause cancers long term, and this will cause a lot of problems for your government. Okay, so these are some of the things you need to be aware of when you're making these investments. I truly believe that the future of business is aligned to social value. I think this is what we're seeing in this paradigm shift. If you do good, you get good. We are now coming to the conclusion that we have enough capital in the world. All we need to do is stitch it all together. Nobody should be going hungry. Nobody should be sleeping rough. This can be solved. All we need to do is just put our collective wisdom together, and we can deliver on it. So that's very much Partnership for the Goals, which is SDG in 17. And that's pretty much my side complete, and I take any questions. So, and thanks very much for your time. So thanks, Courtney.
Thanks. Mike, just in case, thanks so much, Gareth. We're coming nearly to time, and we started a little late, so we can take a few extra minutes if you want. I think that's super interesting, because it just shows you what's actually possible if we're creative and proactive and engaged properly with investors. Do you have any questions? We will, so make sure sure
Yeah,
I'll
yeah.
pick your card and we will share all three with you.
Yeah.
Where are you from?
Asia. I mean, actually, I follow a lot of YouTubers that go back to banker and I have a number. I have questions there. I mean, it's very good. And the first one, my GPL also very good in the presentation that, you know, I think Asian funds are less familiar with doing that pitch. And I do it myself with some of the family office ultra high net worth, but not so much institutions because there are less institutions. And, you know, Asians are less well-spoken. So I think the combination of those three speakers, I catch up at the right time. So it's like, for me, a very refreshment. I have a question because the world is so, I heard Ray Dalio was talking a lot about this, deglobalization, recessions coming, everything. How do you see the breakdown of these continents that will affect the collaborations? I am Chinese, but I'm very American as well. My daughter's in San Francisco, and you know, I know both culture. But how, as a team, you would see this making less efficient for the world to tackle these kind of things, you know?
Okay. Briefly, but then
Yeah, thank you.
I'd like to
I just want to
my colleagues. We discussed a little bit at a WAIPA workshop we had on Sunday, and there is a very clear kind of divided world, unfortunately, and it is impacting investment flows. So you're seeing on the one hand, you know, U.S. investment into China decreasing and vice versa, but then the flip side of that is you will see friendshoring, so more investment going between countries that are politically friends, right, and so then there is a regionalization happening as well that's tied to shortening supply chains, being a little closer to home, and I think these trends unfortunately do have a risk of impacting investment flows. But I'd be curious what Deshant and Gareth think about this.
No, I think the numbers, you know, there is this report which has come out. This is from IMF. This IMF is now going to tackle the office, I think, World Economic Report or something will come out with. And that really goes into a lot of, you know, graphs to explain what this trend is going on. You know, how countries are sort of getting aligned with each other and how that's impacting on numbers. So I think there is obviously a dip because of that. You know, supply chains are sort of realigning themselves. But I think it overall will end up becoming a more resilient world to start with.
Yep.
Every supply chain, you know, this graph of yours, you know, the biodiversity, the last thing that's going to hit us is very big.
Yeah, I think there's a couple of facts that we need to keep in our head when we think of these things. So firstly, Asia will have 4 billion people quite soon. Okay, Europe will have 1, Africa will have 2, and North and South will have 2 billion. So you need to look at the economic shift that's going to come. So that's the reality of it. So I think Europe and North America need to make a decision here around where do they sit in this new world order. So in my opinion, it should be a knowledge-based economy, and they can be an exchange for that, and to share wisdom, and to help facilitate a lot of change. That's just, but I think, as you say, it will create this resilience within the sectors. But it's going to, and it's also, I think this biodiversity element will become more prominent as people become more aware of the effects, because the effects we are feeling now, you know, you can see, I don't know if you're aware of this, but the mortality rates post-COVID are just shocking. We have higher mortality rates now than we had during COVID. So we have done a lot of damage, you know, so these are going to have wider repercussions in terms of our longevity, and this will impact investment.
Yeah, I guess I think this is the challenge, is that there is this slight fragmentation, but the challenges are global, so we have to find global solutions, which is kind of easy thing to say, harder to do.
I mean, it's fascinating.
There may be some discussion going on in the rooms around.
I'd like to hear about Indian infrastructure because I'm coming to mind because I speak China. And the funny thing is, it's under different, what's the word? I mean, the communist system. The infrastructure, to be honest, is built by government. And it's very well built. I also know Brookfield, and they're very big in Brazil and everywhere. So India would need this kind of infrastructure, fund managers, but I'd like to hear your presentation. I have a partner, he's experienced in infrastructure in India some 10, 15 years ago. But I particularly like the healthcare, because that's a global agenda. But infrastructure is too big for private or even institutional investors if they do not specialize. And in Asia, China has been dominating by the government, I think. So I just learned the theory, but I mean, in terms of interest in investing, infrastructure maybe less. But the healthcare thing, I'm very agreeable with Garrett on the kind of knowledge base and sharing, and you bring a chart about, a slide, how to alert the people, and yeah, that's that. And I'm interested in your agencies, it's really good. I have to learn from you guys, yeah. Sure, thank you. Yeah, very, very good presentation. Thank you.
Any other questions or comments before we disband? Okay. Thank you so much for joining us. We really appreciate it.
Thank you.
And we'll exchange cards to make sure you get presentations. Thank you. Have a good